Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for February 18th, 2013. This week's topic, how to do sector analysis. We're going to use Sector ETFs and some tools on Stockscores to do the weekly analysis that everyone should do to figure out what areas of the market are leading the way. A reminder to subscribe to this YouTube channel so that you can get instant updates anytime I do a new video. And as well, for those who are not already subscribers to my weekly newsletter, it is free. You can subscribe to it at stockscores.com/newsletters.asp. All right, let's get into this week's analysis. Apply basic chart reading skills to weekly charts. If you take a too short term of a view and look at daily charts, I find that you get too many mixed messages when doing this kind of analysis. So I recommend that for doing sector analysis with the sector ETFs, you'll want to use 5-year weekly charts and ultimately look for breaks from low price volatility and optimism through resistance. I like to focus on the sectors that make an abnormal gain for a week and then check the chart for a good pattern. What I don't want is to chase sectors higher. I want to try to catch them early in their trend, just when they're breaking from low price volatility. And I'll show you what I mean by that in a moment, because we're going to actually go through all of the major sector ETFs in the US and Canada in just a moment. Now we're going to do that using the watch list creator and chart viewers on stockscores.com. So let's jump over to Stockscores and I'll show you the different things that you want to do with the website so that you can do this sort of analysis. All right, I have already logged into Stockscores. I'm on the My Stockscores page, which is what opens up when you first start up the website. Now what I want to do first is set my default chart to a 5-year weekly chart. To do that, just bring up any old chart. You can enter the symbol in the upper right hand corner. I'm going to enter in Microsoft MSFT. And below the chart, I'm in large chart view here. Below the chart, I've got the charting tab. I'm going to click on that. And I'm going to change this, instead of a daily 8-month chart, I'm going to change this to a weekly 5-year chart. And that way all the charts that I bring up afterward are going to be a 5-year weekly chart. Now I'm also going to turn off some of these extra indicators. I'm not going to look at the MACD, so I'm going to turn that one off. I'm not going to look at the RSI. I'm going to turn that off. Although if you like those indicators, you can certainly view them. I do like to see volume, and I do like to see the stock score indicator. All right, so now I click on Create Chart, and you can see that I now have a 5-year weekly chart of Microsoft. Now that's important to do this now because when we use our chart viewer, it will allow us to see all of the charts according to our default chart view, which we have just set. All right, the next thing I want to do is go into my watch list creator and create a watch list of the sector ETFs that I want to follow. Now I've already done this step. If you notice, I can select here US sector ETFs, and I can see a list of the group of ETFs that I've added to this sector. You can do this with as many ETFs as you want. I've only got about 15 or 20 in this particular watch list, but it's a relatively simple process. You simply click on Create, add the symbols, go through some different steps. It's all in the user guide, which you can find under the Getting Started menu. All right, so once you've created that watch list, you then want to use this slideshow chart viewer tool to select the watch list that you've created. So we're going to start today with the Canadian sector ETFs. I'm going to select that. And I'm going to go through a slideshow of these charts. And this is where it comes down to what you want to look for in a chart. Now remember, this is a longer term view. These are 5-year weekly charts. So we really want to look for breaks of trend or breaks from low volatility. For example, here in mid-2010, you can see that the downward trend that had been in place on the information technology ETF was broken, and that started an upward move that lasted 4 or 5 months. More recently, late in 2012, this sector also broke its downward trend line and started its current upward move. So those are the kind of things that I want to see when I look at these charts. Now, with this particular chart right now, it's in a good upward momentum, and so I'm positive on the sector. However, it's not starting an upward trend. That started late in 2012, probably the end of October 2012. All right, so given that, I'm going to just simply click on my right arrow key, and it takes me to the next chart in my watch list. And here I can see I've got the iShares Diversified Monthly Income Fund. and it's in an optimistic pattern, but it hasn't really made the break through resistance, which it has built up at 1250 for some time. So I think this is a decent looking sector, but until I get that strong breakout through 1250, it's not an ETF that I would want to buy. All right, so I go on to the next one simply by clicking the right arrow on my keyboard. Here I see the energy index fund has got a series of falling tops and therefore pessimism. It does have some rising bottoms in the short term, and so we really have a pennant pattern building with the trend into the pennant being down. That means that this is not a great chart yet. However, if it could break up through 17, breaking that downward trend line, well, then I'm going to be interested. If I do this analysis once a week, takes about 10 or 15 minutes a week, I'll find that breakout when it happens. Moving on to the next one, you can see that the Global Gold Index Fund is very bearish right now. We've got a downward trend, and so I want to avoid buying gold stocks and gold in particular, as it looks like this sector is going to continue lower in the months ahead. Until it can break the downward trend line, which has been building for some time now, I want to stay clear of this one. All right, so I'll go on to the next one. Here I have the materials sector, and again, given that materials is basically mining, which includes gold and other precious metals as well as normal base metals, we can see here that the sellers are in control, the tops are falling over time, and until this sector breaks that downward trend line, I want to avoid this group of stocks. Next one is the REITs. This is a sector that's in a good upward trend. That means that if you find good stocks in this sector, it's got the sector helping it, and so it would be okay to buy them. However, I'm not crazy about buying sectors or stocks that have been going up for 4 years already. I'd like to get in a little bit closer to the ground floor, get in closer to breaks from low volatility. Now, we had a break of the downward trend line back here in early 2009. We had a break from a consolidation mid-2010, another break from a consolidation late in 2011, and a little bit of a flag break here late in 2012. On those weeks, and that's really only 4 different weeks on this 5-year chart, there was good opportunities to enter. So this is the analysis that you have to do every week. As I said, it only takes 10 or 15 minutes. But if you do that analysis every week, you're going to find these sector ETFs as they're starting to turn. And of course, these are the things that I teach in the different stock school courses that I do. And you can look into that on the Stockscores homepage if you have an interest in that sort of thing. And certainly email me at tylerb@stockscores.com if you have some questions about that as well. All right, here's the TSX 60 fund. Actually starting to turn. Looks okay. Not great, but pretty good. Bottoms are rising where they had been falling for some time. That's a sign of optimism. And in the last few weeks, we've actually broken through resistance at the highs of early 2012. Upside is okay. You know, our downside is perhaps down to 17.5. We're currently at 18.5, and the upside is probably 20.5. So we've got a little better than 2-to-1 reward for risk, although it's not a great reward for risk here, but it is good to see that the Canadian market is starting to turn. Of course, the TSX 60 index fund is an index of the 60 largest companies in Canada. Now here's the selected dividend fund. It is bumping up against resistance, but generally has optimism, so I like this sector in general. These are the Canadian dividend paying stocks in this particular group. It does have some pretty strong resistance right where we are right now, and so we may see this sector get stuck here. But overall, it's a decent looking sector. I'm not crazy about buying it here because I think we're a little bit late. But if you find individual dividend paying stocks, they might do okay. Here's the financials. Also, the buyers have been in control here for about 8 months. We are bumping up against some resistance at 25, which are the highs that were set in 2011. Those are the kind of things you need to look for when you look at these charts. So those are our 9 ETFs listed in the Canadian group. I'm going to now go back and do this again, but what we're going to view now is the US sector ETFs. So I just go down my list here to US sector ETFs. Again, this is a watch list that I created earlier, and now I can go through these charts really quickly. So here I see the financials. Love this sector. Broke out about 5 weeks ago. I put a buy recommendation on this sector at the end of last month. I think this sector is likely to outperform. You know, it's a little bit later now. The sector's up 2 or 3% since I first saw that breakout, but it's still something worth considering. Here's the Telecommunications Sector Index Fund. Just broke down last week from a falling top after being in an upward trend for a few months anyway, I think this sector is more likely to go lower than higher, getting stuck at some resistance here. Probably a sector I'd want to avoid in the short term, not necessarily a short, but one that's probably going to head sideways or a little bit lower in the near term. Home builders, this is a sector that I put a buy rating on back in early in the year, well, actually mid 2012, right there on that breakout through 22, and it's up about 20% since then, so that's been a good play. Now, if you're long these stocks now, they look good, although I'm not sure that I would enter the home building sector right now because it's been going up for over a year already. Here is the technology sector. I mean, bias is generally up. Looks like it could be forming a head and shoulders top here, so I'd be a little bit cautious with this sector. Semiconductors has had a good rally over the last couple of months. Coming into resistance now, probably gets stuck up here. I think I'd be looking to take profits in the short term on the semiconductors. Here's the utilities. They've actually bounced back pretty good from a breakdown late in 2012, but I think they're going to stall up in here, coming into resistance at 37.38 on the ETF. And so I'd be a little bit cautious with the utilities. Here's the consumer staples, great upward trend. Buying here, you're chasing after a bus that left the station a long time ago. I think it's a good hold for this sector, but it's not something I'd be a buyer of in a widespread way. Materials, it's done better than the Canadian materials stock. This sector has actually risen over the last 5 or 6 weeks, but got lots of resistance to deal with. Hasn't really made that break yet. I think I would be a little bit skeptical until we can get through 41 on this sector. And even then, the reward for risk up to resistance at 46 won't be great. So okay, but not outstanding, this sector. Industrials just made a breakout at the end of 2012 and has been moving higher since. That was a good break. A good time to buy the ETF was right at the end of 2012 when it broke out from that ascending triangle, and remains a good hold. Now entering here, well, you're getting a little bit, coming to the party a little bit late, but still decent looking sector. The healthcare, great upward trend, a little bit overbought, probably due for a pullback in the short term. This is a sector I'd buy on weakness, but not up here. Retail holders, this is a retail stocks in the US. Again, good upward trend, but getting a little bit overextended, a little bit volatile up here at the top of the trend. Probably due for some profit taking in the near term. I'd be somewhat cautious there. Consumer discretionary, another one, great upward trend at the top of its channel. That means it's likely for some profit taking in the near term. No sign of weakness yet. All these sectors look good. They don't have any sign of weakness, but it does make some sense that they'll see some profit taking soon. Same can be said here of the XRT, which is the S&P retail sector. Nice upward trend, but running away from its trend line, due for a pullback. I think it's likely to happen in the next couple of weeks. Real estate index fund, certainly not as steep as that retail sector, but in an upward trend nonetheless. Coming into lots of resistance, probably stalls up here soon. And the energy fund actually starting to make a little bit of a break out of this pattern, but still has some resistance at 80. So I like this sector as in the early stages of a turnaround, but I think it's going to take some time and you're going to have to be patient. And finally, the Nasdaq Biotech Fund, IBB. Great upward trend, but lots of volatility lately, getting stuck at some resistance. I think a pullback would be healthy here, and then it can resume that upward trend. So that's how I do the weekly analysis of the sectors. And first step is to set up your chart so you can look at 5-year weekly. Second step is to build the watch list of the ETFs that you want to follow. And third step is take 10 or 15 minutes a week to do the analysis. All right, let's get back to the normal analysis that I do each week. The S&P 500 is in an upward trend. At the top of that channel, you can see we're approaching that red line there at the top of that upward sloping channel, and therefore we're getting close to the point where the market may see some profit taking. We've had a great run so far this year, but we are also really close to those all-time highs on the SPY. It's right about 155 or so. So we may get 1 or 2, maybe even 3 more upside weeks before some profit taking comes in as the market gets stuck at resistance. So I'm bullish here, but I'm also cautious. TSX has been lagging the US market. It recently broke through some resistance, and it certainly has more upside potential, but the commodity sectors are a drag on the Canadian stock market, and you'll see in a moment the US dollar strength that we saw last week is going to maybe hold up this sector. So the chart here looks pretty good, but I'm a little bit cautious because of the problems in the gold and in the energy sector. Russell 2000 is a healthier looking chart than the S&P. In other words, money may start to be moving out of the larger cap stocks and into the smaller cap stocks, which have kind of lagged because they don't tend to pay dividends, and those are the stocks that people have liked in the last year. So I like this sector. I mean, if the overall market gets stuck and there's some profit taking, we will get a pullback here, but I still like that chart in general. Here's the Treasury, U.S. Treasury ETF. It is in a downward trend now that's been in place for a couple of months, and I think it's likely to continue lower. That's a positive for the stock market, as money coming out of treasuries probably lands in stocks, or at least some of it does. A little bit oversold. You can see that we're falling away from that red downward trend line. So it won't surprise me if we see a little bounce up in the treasuries in the short term, but longer term I think it's headed to 110 on this ETF. The US dollar made a little bit of a surprise rally last week and broke that downward trend line as it bounces off support. And so that's an indication that we may see some higher prices for the US dollar in the near term. That's going to hurt commodity prices, and it doesn't help stock prices either. And this may be the catalyst for a pullback in the overall stock market. The euro, while the US dollar was going up, the euro pulled back. And again, really it's just pulling back to that upward trend line, which is a healthy move. I think the currency situation that we've just talked about is a relatively short-term one. Strength in the US dollar for a couple of weeks, weakness in the euro for a couple of weeks, maybe a pullback in the stock market for a couple of weeks, and certainly commodity-based stocks are going to see some profit taking. Here we see gold made a pretty substantial breakdown last week through some important support, now headed towards support at 150 on the GLD ETF. Anytime there's a big downward move in 1 week, you usually get a short-term bounce back as people second guess it. So don't be surprised if next week there's a little bit of strength in gold, and that might fool some people into thinking gold is still game on, but quite truthfully, I don't like gold here, and I think it's more likely to be lower in the next couple of months than it is to be higher. And final chart is oil. It is stuck in a pennant pattern. General trend over the longer term is pessimistic. We've had a little bit of a rally over the last couple of months, but it seems to be finding some resistance here as the US dollar strengthens. And so I'm nervous. I think oil may turn lower. So my outlook, US stocks bullish, but with caution, coming into resistance. Canadian stocks bullish, but with caution because of the dependence on the Canadian market on commodity-based stocks. I'm bearish on gold, bearish on oil. The buyers are in control of the stock market, but appear to be losing their enthusiasm. Money may rotate out of the leading stocks and into the laggards, namely some of those smaller cap stocks. Commodity prices suffering from US dollar strength. I would remain bullish with stocks, but be cautious and avoid the commodity-based stocks in general. Only the very best in that sector will be able to do well. Well, that has been the Stockscores Market Minutes for February 18th, 2013. Have a great week in the market and trade well.